and welcome to CrossTalk. I'm Peter Lavelle. As the great global economic financial contraction continues unabated, is it time to rethink capitalism as we know it today? Should the world still rely on markets to generate wealth when the rich only get richer and middle class is crushed? And is there a capitalism that can serve the interests of all? To CrossTalk the future of capitalism, I'm joined by Tom Palmer in Washington. He's a senior fellow at the Cato Institute. In New York, we cross to Arun Gupta. He is the founding editor of the Independent newspaper. And in Bangkok, we have Richard Duncan. He is an author and chief economist at Black Horse Asset Management in Singapore. All right, gentlemen, CrossTalk rules in effect. That means you can jump in anytime you want. But first, Masha, I'd like to go to you. Is capitalism doomed?
It depends on who you ask, Peter. For many Western consumers, producers, managers, and owners, capitalism has been more than an exercise in wealth generation and distribution. It has been a fundamental belief in deregulation, debt-fueled consumption, lower taxes, and more political power for capital than for labor.
But the meltdown of 2008 and failed growth attempts since then have exposed the myths capitalism had built up over a generation. And many are now asking if the preceding generation was an aberration, and if capitalism as we know it is dead.
Karl Marx, it seems, was partly right in arguing that globalization, financial intermediation run amok, and redistribution of income and wealth from labor to capital could lead capitalism to self-destruct.
If it isn't death, then it's radical change, with key pillars stretched to their limit. Free trade reached a Doha Round impasse in 2006. Carbon trading still sees developing nations saying they shouldn't have to pay for what developed nations have already done. Job concerns have heightened economic parochialism. And deregulation? That path led to banking bonuses, Lehman Brothers, TARP, and massive banking debt socialization.
But when it comes to ordinary people, we suffer cuts, we suffer austerity measures. So it's about making that political argument and making it clear the problems of capitalism itself.
So as the global economy teeters, the generation where capitalism was seen as a self-evident and righteous end has passed. If it isn't dead, it will be different, and on the road ahead, more questions will be asked of capitalism and who it's working for. Back to you, Peter.
Thank you very much for that, Masha. All right, I'd like to go to Richard first in Bangkok. When people say it's the end of capitalism, what do you think it means, and what do you think they think it means?
Peter, hello. Actually, I don't think the economic system that we have now is capitalism. Capitalism was an economic system in which the private sector controlled the production process through savings, capital accumulation, and investment. And the government played very little role. Well, now the U.S. federal government's spending $25 out of every $100 spent in the economy, and the central bank is creating the money and manipulating its value. Moreover, the production process is no longer driven by saving and investment. Instead, it's driven by borrowing and consumption. In 1964, the total credit in the U.S. was $1 trillion. Now it's $50 trillion. There's been a 50-fold increase in credit in the last 50 years, less than 50 years. This credit expansion has completely transformed the size of the economy, the structure of the economy, and in fact, the economic system itself. In my view, we've moved from capitalism to creditism, for lack of a better word. Now creditism is in crisis because the private sector is incapable of repaying its debt.
Okay, Arun, if I can go to you in New York. Richard, thanks. Let me go to Arun in New York.
The economy is now dependent.
Let me go to New York here. That's a very interesting point that Richard brings up. We don't even have capitalism anymore. We don't even need to talk about its end because we're in a totally different system anyway. What do you think about that?
Well, I think we could talk about the myth of capitalism, the myth of the free market. There never has been such a thing as a free market. Governments have always intervened, usually for the benefit of capital. The railroad boom, of course, involved a massive transfer of wealth, especially in terms of land, to the railroad industry. The post-World War II capitalism boom was in many ways, especially in the West, was a fusion of the state and corporate interests. So there's nothing unique about that. And in terms terms of credit and financialization, these are nothing unique either. In the 1920s, you also saw a huge expansion of credit that fueled a stock market boom. Financialization goes hand in hand with capital. We should see the post-World War II boom as the aberration. I know we're going to keep coming back to this, but this was a period of unparalleled growth for unique historical circumstances. And we do have a hybrid system. Largely, it is controlled by corporate interests. And the thing is, capitalism tends towards monopolies, as we've seen in many historical period. And these monopolies will exert power over the government to increase their share of the economy, to increase their wealth, to increase the upward transfer of the wealth. And that's what is really going on in this period. And again, it's nothing unique historically.
Okay, Tom, I'd like to go to you in Washington. What is different about this economic turndown for capitalism? We've already heard about credit. Was it the deregulation? Was it just preferential treatment towards corporation? Was it poor tax policy? What is unique about the challenges that capitalism is facing today?
Well, the big problem was a crisis of interventionism. And indeed, Richard pointed out that state institutions, the central banks, pumped out gigantic amounts of credit. I mean, setting interest rates into negative territory. 2004, 2006, the Fed had negative interest rates. This is not a capitalist phenomenon. This is politicians intervening into the economy to pump it up and create a short-term boom. This created an asset bubble. This is a completely predictable result of expansionary monetary policy of that sort.
Okay.
And then interventionism through Fannie Mae, Freddie Mac, the Basel Accords poisoned the world financial systems. So what we've seen is a real failure of interventionism and cronyism, not free market capitalism. We have a real case of mistaken identity here as to what is responsible for the crisis. People such as Arun, who say it's an increase in greed. Look, greed is a pretty constant thing in human society, and there's no metric that showed it increased. But we do have very good metrics of Fed policy and governmental policy to create an asset bubble that then burst, and now we're living with the consequences. But we have seen, and this is something that really bears repeating, is a huge increase in per capita incomes around the world because of free market capitalism. India and China, China after 1978, India after 1991, literally hundreds of millions of people lifted from terrible poverty caused by socialism and lifted into middle-class prosperity. This is the largest poverty reduction experience in all of human history, and it's happened in our lifetimes.
Arun, it looked like you wanted to jump in there. I mean, one of the interesting things about today's capitalism, or maybe the capitalism of our generation, we've always associated capitalism with civil liberties and a strong middle class. Now, what we just heard from Tom is that we have rising middle classes in the emerging world, but we have in the industrialized world, we have middle classes that are being pulverized, okay? So capitalism means something different to different people in different places, apparently.
Well, first of all, in terms of India, having been there frequently, that's a nice fantasy to tell people that hundreds of millions of people have been lifted out of poverty. Something like over 80% of the population is in moderate to extreme poverty. A few tens of millions of families have been lifted out. But when you're talking about a population of over 1 billion, it's not that significant. And what you have also is massive dispossession going on, and we cannot, and that's important to remember, because we cannot separate any particular capitalist economy from the rest of the world. So the post-World War II U.S. led boom was in many ways based on super exploitation in the third world. Remember, this was an era of all sorts of wars and great instability in the post-colonial world, and a lot of it had to do with ensuring the flow of cheap commodities. Copper from Chile, tin from Bolivia, oil from the Middle East, bauxite from Indonesia, and so supporting all sorts of repressive regimes to ensure the
This
flow
is just
of
a
cheap
fantasy
commodities.
that we're hearing here.
What we've seen is that the instability has now moved to the center. You have these austerity programs that are now being imposed on the Western nations themselves, whereas in the 80s and 90s, they were being imposed on the periphery. Because the demand is always the same, by those who control the economy, that they need to have their profits, they need to have the wealth flow upward. So what we see is a system that is breaking down. But again, I don't think this is anything historically, if we're talking about the last couple of centuries, unique what is going on in this moment in terms of financialization, in terms of the economic crisis.
I liked what Tom had to say about fantasy, but let's go back to Richard first before we go to the break.
Okay, I've lived in Asia for most of the last 25 years, and I've watched Asia be transformed by the economic boom that's taken place. But the boom here has occurred for one reason and one reason only. It's because of the U.S. trade deficit. The U.S. trade deficit grew to be $800 billion. That was $2 million a minute. That's what enriched the rest of Asia. That's what made Asia boom. And that trade deficit was paid for on credit. Now that brings us back to our credit crisis. Now this economic paradigm, credit expanded every year in the United States from 1947 until 2009. And when it started to correct, then the crisis started. So we're now at the end of this 40, 50-year debt-fueled economic paradigm, and it looks like it's going to implode.
What do you think about that, Tom? Earlier you said fantasy. Go ahead.
And it will take Asia down with it.
We heard from Arun we heard just a lot of rehashed dime store Marxism, and it doesn't stand up to the facts. Let's look at some actual facts on trade flows. Take the American economy. Does a much greater trade with Canada next door. That's the largest undefended border in the world, and over $600 billion a year of trade goes back and forth across that border. Fact of the matter is that people in poor countries, in Africa, for example, suffer from a lack of trade, not too much trade. So this whole periphery core, as I say, dime store Marxism, just doesn't stand up to analysis of the facts. And if you look at India, and I recommend Gurcharan Das's very good book,
All right,
India
Tom, I'm going to jump in here, and I want you to continue this point after a short break. After that break, we'll continue our discussion on capitalism. Stay with RT. Welcome back to CrossTalk. I'm Peter Lavelle. To remind you, we're discussing if capitalism is doomed. I'd like to go back to Arun in New York. Okay, you were accused of dime store Marxism. Okay, well, you can respond to that when you want. But one thing is, gentlemen, one thing is undeniable is the income distribution in the United States and some extent in Europe now is getting worse and worse. We've never seen anything like it since the beginning of the Great Depression in 1929. Now, does that have something to do with the current model of capitalism? The rich just get richer and the poor just get poorer. Arun, go ahead.
Well, of course, if we look at the neoliberal turn in the 1970s, what's going on is that at that point, wealth and income had dropped to historic lows for the upper 1%, the upper 10%, the 0.1%. And so you have Reagan coming in the U.S., Thatcher coming in England, and you see a massive upward transfer of wealth. So, for example, by the mid-1970s, the top 1% of the population held about 20% of the wealth. That was a historic low. By the late 1980s, barely a decade later, it was up to 35%. And recently, we are now above Gilded Age levels. The 400 richest families in the country, in America, have more wealth than 50% of the population, than 150 million people. And we need to really understand, we can talk about the neoliberal moment in terms of deregulation, flexibilization, trade liberalization, personal responsibility. We can talk about the ideology and tools of it, but really what it is about a massive upward transfer of wealth, because even though the ideology is market fundamentalism, that government should not intervene in markets, government always intervenes in markets, and it depends on whose side they're intervening on. During the Keynesian moment, you did have some intervention on the side of labor, but now what it is, it's on the side of capital. So with all the various debt crises, such as the Mexican peso crisis in the 1980s, the East Asian financial crisis, and the credit crisis now, we see government intervening to aid corporations to ensure that bondholders are kept whole. That is what this is about. I think we need to do away with the fantasy of the free market that some uncomfortable perches like to peddle.
Okay, Richard, if I can go back to you in Bangkok, I mean, Arun brings up a very interesting point, is that governments around the world are propping up capitalism because capitalism is really to the benefit of corporations and not to labor and not not to civil society in general. Is that how capitalism has changed, let's say, since the 1980s?
Well, during my lifetime, it seems to me that everyone's become much richer. Of course, the income disparity has become greater, but as credit has expanded to $50 trillion, that's created a great deal of wealth globally. The problem is now that debt on one side is an asset for someone else. And so when the debt begins to blow up, as it is now, it also destroys the assets. So the banking system is extremely vulnerable because its assets are being destroyed with the debt destruction. And if the credit begins to contract now, all of us are going to become very much poor, the rich and the poor. And so whatever kind of economic system we have now,
let's not forget that over 3 billion of people in the world live on less than $2 a day.
Arun, go ahead. Repeat. Go ahead.
I said, let's not forget that over 3 billion people in the world live on less than $2 a day. I think all this abstract talk forgets the reality of the extreme deprivation, of the poverty, of the dispossession.
This is a very important
in Russia
point
itself,
Arun is
for
raising.
example, that the life expectancy for a Russian male from the Soviet Union went from approximately 73 years old to 59 years old. What you're seeing is the destruction of people itself. When we talk about
there's a reverse trend. Arun,
commodities.
Thank goodness there's a reverse trend here. It's getting better. Okay. But no, I see your point.
But that's an extreme crash. That is unprecedented in human history for an industrialized country to achieve a drop in life expectancy outside of a war was unknown until the collapse of the Soviet Union.
And you can see why Russians are very sensitive about the 1990s because of the shock therapy that was practiced in this country, and people haven't forgotten it. Tom, you've been wanting to jump in. Go ahead.
This is a very important point that Arun brought up, but he's got it backwards. If we look at the percentage of the population that's living on $2 or $3 a day, it's abysmally high, but it's falling, and that is the key. It used to be that almost everyone, except for the tiny ruling elites who controlled the states, lived at such an abysmal level of poverty. That percentage has been falling as a percentage of world population. He mentioned the case of India. He said, well, still it's the case there are lots of poor. People in India have always 80%. Been poor. Wake up. And the question is, are they getting richer or poorer? That's the relevant question. Poverty is the natural state of mankind, and wealth has to be created. It's created by free market capitalism, by investment, by production, and by exchange. So if you want to look at India, the question is has it been changing since 1991 for better or for worse? And the question is unmistakable, for better. The same thing in China. I visit both countries.
All right, I'd like to change gears, gentlemen. I want to go back to Richard in Bangkok. Okay, let's look at the Great Contraction going back to 2008. I mean, the way I look at it is that we've seen banks bailed out, we have seen corporations bailed out. If we go to TARP in the United States, I mean, it's always the rich people being bailed out. Is that how capitalism is supposed to work? Because are these the people only creating jobs for the rest of us?
Well, again, I think that the government recognizes that whether it thinks that we have capitalism or not is irrelevant. It's clear that if they don't bail out the banks, and for that matter, the major automobile companies, that if the banks go bankrupt, it's going to destroy everyone's wealth. That $50 trillion I keep talking about would completely disappear, and we would all be hungry. So they had no choice. But no, this is not classical capitalism. But capitalism is based on a gold standard. The reason we had the Roaring '20s and the Great Depression is because the gold standard broke down in World War I and created a big credit bubble during the '20s. The same things happened this time. The gold standard broke down with the Bretton Woods system in 1971. It created a very long credit boom, and now that credit boom is blowing up, and we're likely to collapse into a new Great Depression unless we come up with some very clever new strategies to resolve this crisis.
Tom, what do you think about that? Because a lot of people say that the Western financial institutions, their toolbox is empty right now, that this great contraction is not like we've had recessions since the Second World War. There's something fundamentally wrong, and there has to be some fundamentally new answers to the problems that capitalism faces today. What would you say to that?
I'd say the first question is bailouts are not a feature of capitalism. It's not a feature of the free market that someone whose best friend is the Treasury Secretary gets a giant check like Goldman Sachs did. This is cronyism. It's pure, unadulterated cronyism that we're suffering from right now. Bailouts of the banks, bailouts of companies, the nationalization of General Motors by the American government, and what's happening in other countries around the world as well is cronyism. We've seen is a real crisis of interventionism. If you ask what caused this crisis, sorry?
Would you have let them crash?
I absolutely would have let them fail.
Would you have let them collapse?
That's part of the
Would you have not
important
bailed
part
them
about
out if you were
a
in
market
charge?
economy is firms can rise if they produce value and satisfy customers, and they go out of business if
Your
they
credit
don't.
card
I agree with
wouldn't
what
work.
Richard is
Your bank would
saying.
be
This
empty.
Now.
Okay, Arun, I want to go to
This is
you.
a type
It
of-
looks like the system we have now is that we have
Call back and
capitalism for the rich, and we have nothing else for. We have socialism for the rich, and we have capitalism for the poor. How do you like that? Do you agree with that phrase or not?
I think that's a very accurate way of putting it, and I think that Richard brings up an important point in terms of, yes, something had to be done. What we see is free marketers like Tom peddle this ideology of burn the house down, let it burn down if that what happens. Now, what happened with the credit crisis is that the governments nationalized the losses. They should have actually nationalized the banks. It is in the public interest to have control over the credit system, and that could have easily been achieved. And this is the point I'm making, as we can see again and again and again. Bailouts are actually the norm. There have been hundreds of these financial crises, and with increasing frequency over the last 30 to 40 years under the neoliberal regime, and you have all sorts of bailout. The Mexican peso crisis was a massive bailout of the banks. Long-term capital management was a bailout. You have these bailouts again and again and again, because the only other option is to let the economy crash, which would be extremely devastating. Now, the way the bailouts are structured, they're structured mainly for the benefit of the corporations and wealthy, and certainly some benefits trickle downwards in terms of that the credit system keeps pumping, but we need much more of a human-centered system rather than a profit-centered
That's a very good
system.
point. I'd like to go to Richard on this point here. What is the future of capitalism here? Because I think a lot of people would agree, irrespective of your ideological trajectory, is that it's reached a certain, critical mass. Obviously, we can't keep going on the way we are now. What needs to fundamentally change? Because you said that there is no capitalism, and if you're a proponent of that system, what needs to be done to bring it back online?
Right. I think, as I've said, we have a government-directed economy now to a very large extent through these bailouts and the government spending so much money. But in order to revert to something closer to economic orthodoxy that perhaps should ensure sustainable growth, what we need to do is we need to stop borrowing and consuming, and instead we need to borrow and invest. What I'd like to see, my fear is that if the credit begins to contract, then this economic system built on credit is going to implode. Therefore, how can we ensure that credit continues to expand, but it expands in a way that generates a productive return rather than just borrowing and consuming as we've been doing for decades? I'd like to see the government borrow and invest. For example, I'd like to see the U.S. government borrow $1 trillion at 2% interest and develop solar energy over the next 10 years. Then that would be an investment that would yield returns for eternity that would also pay for itself. We could bring down the budget deficit by $200 billion
All right,
a year.
I'm going to have to
because
jump
we
in
wouldn't
here.
have to-
Many thanks to my guests today in Washington, New York, and Bangkok. And thanks to our viewers for watching us here at RT. See you next time. And remember, CrossTalk rules.